but to have some of it is a good thing. So the question is always what amount of it. So that's, I have a little bit about it. I'd probably shock you about how little I have.
투자 포트폴리오에 암호화폐 일부를 보유하는 건 좋은 전략이며 본인도 암호화폐를 조금 가지고 있다고 주장하고 있는 인물은 헤지펀드의 대부이자 살아있는 전설적인 투자자 레이 달리오입니다. 레이 달리오는 워렌 버핏과 함께 현대의 가장 뛰어난 투자의 구루로 손꼽히는 만큼 그가 생각하는 향후 전반적인 글로벌 거시경제의 흐름과 인플레이션 그리고 비트코인 및 전반적인 투자에 대한 그의 통찰력 있는 인사이트에 대해서 함께 들어보도록 하겠습니다.
Inflation is one thing I want to really touch on. I don't consider myself a savvy investor. And so I used to joke with my money manager, I want to be as close to my money buried in the backyard as possible. And obviously for inflation reasons, I have since learned that is a terrible strategy. But what do you do?
Well, first thing is you realize that holding cash and dead assets is a bad thing. So a lot of money is in cash because people think that cash is the safest investment, but they are measuring that in the amount of money that they get, nominal returns, and they say it doesn't wiggle much. But think about it. It's lost, as of the most recent statistics, 8.5% over the last, inflation is 8.5%, and they receive virtually no interest rate in cash. And so there was an 8.5% loss of buying power as a result of inflation. And so psychology should change and is in the process of changing to realize that you have to think in terms of buying power, not the number of dollars you have. And you have to think how much is your buying power. And so the worst thing is to be in cash. Like I say, cash is trash, and to be out of the bonds. The next thing is to have a diversified portfolio of assets. Diversification means some assets that are inflation hedge prone. For example, you're better off to own an inflation index bond than a regular bond.
What makes something an inflation index? Like what are the nature? Is that going to be gold and precious metals, tangible things? Like what are the things that are resistant to inflation?
Yes, and inflation index bonds because their returns are tied to inflation.
I don't understand that well enough to know how one would do that. Is that worth going into? I don't know what the punchline is going to be.
I think the punchline is, if you take a look at it, it's simple. It's like a regular bond, except its payments are linked to the inflation. So they compensate you for inflation.
So is this a government bond?
Yeah, government bond. And there are some tax advantages to them too.
Why don't people just flood into that?
Well, I think it's one type of asset. The flooding into any one thing is an issue. But moving from the nominal bonds, in which the government just says, I'll give you this amount of money, and it has the unbelievable and unlimited ability to print the money it gives you, it would favor inflation index bonds. And it could be other assets. Some people would say something in terms of cryptocurrencies, or it might be those other assets.
What's your take on cryptos?
I think that too much people pay too much attention to one at the extreme of the other, that either somebody's all crypto, or they're all gold, or they're all something. And I believe that that's a challenge. I think that crypto, like gold, is not a productivity earning asset, and it can be controlled by governments in lots of ways. It's been outlawed in a number of places, and it also can be monitored. The privacy element is not secure from governments doing monitoring. And the size of crypto is about the size of Microsoft. It's all crypto combined. And so to be overly concentrated in it, in my opinion, is a mistake. But to have some of it is a good thing. So the question is always, what amount of it? So that's, I have a little bit about it. I'd probably shock you about how little I have. So and other things I would say is that geographic location is important. In other words, not just all in US and US dollar assets. I would say that the three things that again I'm looking at if I go down countries is first, are they earning more than they're spending? Do they have a good income statement and balance sheet? This is going to be very important in the period ahead because the amount of credit that's going to be available to bridge the gap between spending and earning, cash flows and so on, is going to be quite narrower. So a lot of companies even that were able to raise cash and not have good cash flow because of maybe growth expectations in the future will find it more difficult. That'll be true for individuals. It'll be true for countries. So does it have a good income statement and balance sheet will be important. The second is places. How are they working with each other? Is there civility? Or is there civil war, on the brink of civil war? Because countries where they work well together, they're productive, are going to have a real competitive advantage. Orderly places, safe places to be.
So obviously, I'm shocked to say this out loud, but the US would be in a bad place in terms of that. What are places that have great stability there?
There are parts in the United States that are better than other parts of the United States.
Meaning like local government bonds or something like that?
Well, I'm out talking about where you want to be, and then but it could be bonds, it could be places. I'm talking now the places. For example, we just had the shooting in New York City on the subway, and New York City is becoming more dangerous. Chicago's becoming more dangerous. San Francisco's becoming more dangerous. You're seeing people leave some places for other places. Texas is Austin, or to Florida and so on. So there are differences within the United States and differences from the United States.
So you mean people need to think about picking up and moving and actually going and being in a different place?
And those are also the better places economically, because when people do leave, and they do that, those who leave are higher income and higher taxpayers. And as a result, there's more of a hollowing out that takes place in that, which creates an economic problem as well as a lifestyle problem. So I think you're going to see greater differentiation in places, which affects where you want to be and where people who can afford to be there want to be, and also affects what their economies and markets are like. So are they financially strong? In other words, income more than expenses and good balance sheet? Are they civil with each other? So they're working together rather than hurting each other. And number three is, are they in a position where they're likely to be in a war, or are they likely to be out of a war? You don't want to be in a war. So, and those places, investing wise, history has shown, do worse because they have to spend more money. There's more problems, more pain that's being exchanged. Neutral countries in wars do very well, as it turns out. It's a long-winded answer to your question, but I would not want to be in debt or cash and those instruments. I would want to diversify well with a bias toward inflation-protected assets. And I would want to diversify between locations, countries, in terms of the investment based on the criteria I've just mentioned.